We have Semir here with Mosaic. So thanks for coming out and for speaking on the panel. He spoke specifically on how to get deals done. So can you share a little bit about the challenges and opportunities of getting deals done in an environment like this?
Absolutely. So Chris, the short answer is it's not. Go home, learn how to play golf, go do something else. Don't buy commercial real estate. No, in all seriousness, I think it very carefully is the short answer, where historically we had something like a two-layer capital stack, debt, equity, and you push your weighted average cost of capital down as soon as possible, and eventually rents grow, and expenses were always trended 3%. Well, expenses are not 3% anymore, and the rent growth is moderated. So how do we figure those out? Well, we had a very intricate five-layer capital stack on our recent transaction. After a 2-year hiatus, we're very happy to report that we're back in the market and just closed on our first acquisition after 2 years, just last month. Very excited about that.
Awesome. And then, in terms of having a focus in a sector, focus in a market, it sounds like you are pretty targeted in your focuses, right? Can you share us a little bit about your thesis?
Absolutely. So incredibly targeted, and that target changes as well. So think of a very a scalpel approach, essentially. We've moved from historic preservation, tax credits, embedded with opportunity zone, all the way to very carefully analyzing the greenhouse gas reduction fund with SRECs, sustainable renewable energy credits, the implications from that and electrification, and the implications from that into Department of Housing and Community Development money. So again, a very complex capital stack, but that's how we're essentially getting deals done today.
How are you thinking about markets like, Georgia, Florida, Carolinas, DC, Virginia? How do you think about these different markets, and why are they exciting to you?
This is a great question, because we are an affordable housing focused shop. All the places that you mentioned have no state restrictions with regards to the rent increases. And so in certain cases, on many of properties surrounding us, rents have gone up double digits multiple years, right? And so we can argue what the implications of that were, but that puts a drastic need on affordable housing. Now, a subsector of affordable housing can be housing choice vouchers, essentially Section 8 or voucher rents, extended use light tech or active light tech, and then naturally occurring affordable housing. And we want to play in all those spaces, especially in states that need it the most, including all the states that you mentioned.
Are you seeing a lot of deals now coming in at under replacement cost, or are you seeing things be above that? Where are we in this cycle?
Yeah, I think it really ranges, particularly in the MSA. We're fortunate enough to have a bunch of MSAs, a few MSAs that we operate in. And so to take a couple in particular, in Richmond, Virginia, the price per units are skyrocketing. The rent growth is moderating, but the rents are still really high relative to what they were last year, 10 years ago, anything. In DC, you do have that pretty significant discount to replacement costs. Part of it is because of the legislative risk that's associated with operating in DC and all of DC. But if you could read the tea leaves and figure out all the debt trenches and capital trenches, then you could make a deal happen like we did.
Awesome. Well, thanks for coming to Atlanta and joining IMN, and we're looking forward to having you on the podcast to share more about your operations.
Happy to. Thanks so much. I appreciate it.
Cheers.